everyone, this is David again, coming back at you with episodes 11 and 12, which is the final episode really of this year-long foray into DeFi and comparison with exchange-traded funds, just investing in general. So first of all, I want to apologise that I didn't get a June 2022 video out, just with the whole complete and utter collapse of Terra on May the 9th. It just kind of really took the wind out of my sails. So even after 3 weeks, I still felt just very deflated about the whole situation. Lost a bit of money there. And so I was only able to kind of get back onto my feet recently. So I'm going to combine episodes 11 and 12 together. Episode 11 is Capitulation, which has kind of really captured the collapse of Terra throughout the month of May, extending into June, and then the episode 12 is Fin, just to finalize the 1 year cycle. And it's hard to believe that it's already been a year since I've been involved into the whole decentralized finance side of things. So yeah, things go much quicker than I expect. So looking at the exchange traded funds, I've invested $12,000, so that's $1,000 each month. And back in May, the value was $9,828 after putting in 11,000. And then, funnily enough, even though I've contributed almost 12,000 Australian dollars, the value had actually decreased. So this represents a 20% decrease on my investment, which is pretty reflective, I guess, of the S&P 500. I think that the my tech savvy choice probably got hit harder than the average stocks that were present in the US stock market, but nevertheless, I guess that's how it is. But yeah, a 20% loss is, I guess, not the end of the world, but it's also not very pleasant. And particularly when before, I think maybe between 3 to 6 months in, I was up 15 to 20%. To not only lose all of that, but to go in the opposite direction with a negative 20% return is disappointing. But I think was probably on the cards given the whole macroeconomic situation with the war in Ukraine and increasing inflation rates in the US and presumably Australia as well. So anyway, that's the exchange traded fund side. For the crypto side, I've just divided it into June and July. Let's look at June first. The total value was $4,674 which is around 6,700. And the breakdown was here. I still haven't reinvested this 1,350 DAI back into Bitcoin, Ethereum yet, and I guess that was probably on laziness on my behalf, but it was actually worked out pretty well given how much things have dropped. And in July, which is today, the 3rd of July 2022, this represents the final value. So that 12,000 Australian dollar is now worth $7,941 Australian. And again, this just shows that my DAI value hasn't changed, but what has is the my A-Try crypto. I've slowly been adding into that, and that's actually very slowly been accumulating CRV rewards. Actually, if we go back, should be able to see that I had very minimal CRV rewards back then, 2.05 CRV. So yeah, that actually is here. So I think there was a period of time where the A-Try crypto pool that I had deposited wasn't actually returning rewards, so I actually turned that around and then made sure that I deposit into an active pool. So I've got 27 CRV in, it looks like, the past month or so. So that's pretty good. And then just the standard, so deposited on Aave and Geist, the two lending and borrowing platforms, and getting a small amount of interest there, 0.003% APY, 0.01%, so just a very minimal amount really. And then the final slide here, I've just highlighted in blue the two numbers. You can see that I actually did the calculations on the 15th of June, despite it I should have done it at the start of June. You can see most of these other numbers have calculated my return at that time within the first week of the month. But yeah, you can see that particularly at the end of June, like I had a negative 38% return, and after a year, I've actually negative 33%. So I'm $8,000 here. So while this looks bad, I guess there's two things. First of all, is that it's the negative 20% looks not as bad as negative 33%, but given the whole complete sell-off in crypto, you can see, say for example, these red returns. So the red bars had kind of gone down from month 5 to 8, and then there was a bit of a peak from 8 to 9, and then had started to go down after that. Yeah. Then yeah, so as a result of that, the negative 33% return actually is better than certainly what Bitcoin and Ethereum have, the percentage drops that they've had. So I mean, for example, Bitcoin I think has had a 75% loss in value compared to its peak, whereas Ethereum might be down 80%. Um, so so I guess this is the power of dollar cost averaging, is that you're slowly going in, and then any dips you're taking a slow and steady pace, and purchasing those dips, and you'll be purchasing relatively more. So despite Bitcoin being down 70% from all-time high, my portfolio is only negative 33% relative to cash anyway. So I guess I just wanted to thank everyone for. I don't think anyone else has watched this except for me actually, but if anyone does watch this, thank you for looking for keeping an eye on the series. I won't be making any more videos, but I will still be continuing to dollar cost average. I think now is an excellent time to get into particularly blue chips to start off with. Bitcoin, Ethereum, I'll probably continue to put stuff into HRI crypto to a certain extent, and then we'll go from there. So I won't be making any more videos for this series anyway, but we'll see where the portfolio heads in the next year or two. So thanks very much. Bye.